work whatever you want to do. I think probably what we would be wise to start with is finishing that inventory problem, doing perpetual FIFO, perpetual LIFO, perpetual moving average. You actually know how to do that, right? Anyway, oh, the quiz. When's the quiz?
Wednesday.
That's all it was. Yeah, it's Wednesday. Okay, so be ready. Here we go. Need to build some points, right? Know how to do this. It's going to be pretty straightforward and pretty hard, like this one. So, there will be some questions on Chapter 5, and they're going to be extremely easy. Although I guess I only have one question in Chapter 5 here. And it was real hard. But anyway, they're usually very easy. So if you've read the chapter and you're familiar with what's in there, you'll get a few points for having done that, right? I want you to be familiar with that stuff. So it's more the theory side of things, which we'll do a lot through 11 for those who go on. All right, anyway, so let's take a look at problem number 1 again, okay? And let's get ourselves set up where we were when we did the periodic FIFO, LIFO, and weighted average. We had units, remember this? Okay. So first we did units of inventory, right? And then we did the dollars of inventory and all of that. So a little review of that, I suppose, anyway. Everything. Okay, so when you set up the problem, and what we're going to try to do is we're going to try to get cost of goods sold there and ending inventory. So that's what I asked for. So, but it's beginning inventory plus purchases. You all know this, right? Okay, and when you add those two together, you get what's available. True. And then you subtract your ending inventory, and that will give you what? What you start with plus what you buy is what you have. Really good time. Beginning inventory plus purchases is what's available. Okay? And then subtract the ending inventory, and what do you have? That must be what you don't have, which is called cost of goods sold. That's it. And whether you're using periodic or perpetual, it's exactly the same. Okay, guys? It's not a big deal. Right? Beginning inventory was how many units?
16 and 9.
16 units, $9. How much was that in total? 144. So the beginning inventory was 144, right? And this is just nothing to this, is it? Okay, then what's the first thing that happens? You have to keep them in order for perpetual. You do not have to keep them in order for periodic, right? It doesn't make any difference because you pretend you bought everything before you sold anything, right?
So okay. Perpetual order matters. Order matters,
yeah. So when you're doing these little T accounts like this, I keep them in order. So you have them in order when you do this perpetual stuff. Make sense? Okay. So if I only ask for periodic, who cares? You don't have to write all this stuff down at all. So the last few purchases, if it's FIFO, right? It's LIFO, look at the beginning inventory and the first few purchases. It's weighted average, just add up all the quantity that you've got, right? And what the total cost and get the weighted average.
Oh, so for both perpetual, for both periodic, you don't also you can do all this?
Nah.
Okay.
Yeah, you go straight.
That's the last of the first one.
Yeah.
Okay.
Yeah. But you're going to need to know for perpetual.
Yeah.
Okay, sure. All right. So the first thing is a sale, was it? By the way, if I do a purchase first, if I'm doing perpetual, which ones will I sell first? If I'm doing perpetual LIFO. Oh, well, if I do a purchase first, I'm going to sell those first before I sell the beginning inventory. That's the big difference, okay? And that'll be clear when we do this a little bit, I think. Okay. All right, so here we go. The first thing is a sale. Yeah. And I can, of course, have purchases first. How many units? 12. And you know what? We don't know what those cost, right? That's what we're trying to figure out. That's what we're doing here, okay? What's the journal entry going to be for those when we do figure out what it costs? Yeah, I just credited inventory. Guess what the credit is? Inventory. And what do you debit if you sold it to somebody? Cost of goods sold. That's it, guys. Okay, so if I sold something that cost me $60 and I sold it for $100 to a customer on account, what would my journal entry be? Debit what? I sold it for $100 on account. Debit what? Accounts receivable. If it was a cash sale, it would be cash, right? $100. Credit what? Sales revenue. This is too easy. You don't have to put the word revenue if you don't want to. You can. Some companies use sales revenue, some use sales, but everybody knows it's revenue account. Okay. All right. We never call cost of goods sold expense. I don't know why, but it is an expense, isn't it? Okay. Yeah. I say it costs $60. So what would you do with your $60? Debit what? It's the major cost of getting the sale. You gave me the inventory. Well, then credit what? Where'd it come from? Inventory. So I credit inventory. And what did you want to debit? Cost of goods sold, right? Yeah. It's the major cost of getting the sale. They're not going to give me the $100, right? Or they're promised to pay me, in this case, the $100 cash receivable, if I don't give them the inventory. True. They'll walk away with it. What's my gross profit? 40. 100 less 60 is 40. Is that my net income? No, because there's a whole bunch of operating expenses. Salary expense, rent expense, tax expense, utility expense. You got the idea, guys? Okay, that's all we're doing here, okay? So we're figuring out what cost of goods sold is, really. And we need ending inventory for the balance sheet. We need cost of goods sold for the income statement. And they're going to be different with different inventory methods. Got it? We have 6 different ones, although 2 of them are the same, I think. So there aren't really 6, there's really 5, I guess. What are the 2 that are the same?
Isn't it periodic and perpetual FIFO?
Yeah, periodic and perpetual FIFO are exactly the same. So if we're going to do, if we say we're going to do perpetual now, and we're doing FIFO, what would we say? Same as periodic, okay? So if I ask you to calculate FIFO periodic, or FIFO perpetual, what would you do? Just do it periodic as fast, right? And easy. The reason it's the same is you're always selling the oldest inventory and always keeping the newest, right? So it wouldn't make any difference which method you use, periodic or perpetual. It gives you exactly the same answer. Okay, anyway, so what happens here? I got sale 1. Where am I at right now then? I guess I have 4 units left, right? Everybody got it? What happens next? Purchase 1? How much were those?
18 units.
And by the way, could I do 2 purchases in a row? Well, of course, right? Could I do 2 sales in a row? Of course. Really what would probably happen is you do maybe 1 purchase a month or once a week or what, if it's perishable stuff, maybe 1 a day. How many sales are you going to have? Oh, thousands. You know the idea? So this is just for demonstration, right? Very few people would have as many purchases as sales. It's a weird thing. Okay? All right. I don't know, maybe if I sold 747, I might buy 1 and sell 1 and buy. Okay, anyway, Rolls Royces, not even that. You probably have a few of them, right? Buy a few at a time and then sell 1 at a time. Okay, so 18 units. What they cost? $10, you said?
Yeah.
How much is that for purchase 1? I think it's 180, doesn't it? Okay, so here's my beginning inventory. There's the first purchase. Then what happens? There's another sale?
Yeah, 19.
19 units. Guess what? I don't know what those cost. You guys with me? Everybody staying with me, right? Okay. All right, so then what do we have?
Purchase.
Another purchase. And that's it, isn't it? Of course, there could be many, many more in a year for a company. Purchase 2 is what?
17 units, 11.
I guess this was a month, wasn't it? 17 units at 11. How much was that? And notice I am keeping them in order, okay? So, how many units did I purchase then? To me, like 18 plus 17 is what? Okay. Oh, I didn't put units down, did I? That's good. How many units did I start with? 16. How many units did I just buy? What did they cost me? 180 plus 187. Everybody agree with that? 367?
Something like that.
All right. Okay, how many are available then? If you start with 16, you bought 35. How many dollars are available? If you had 144 when you started, you just bought 367 more. What's 367? Okay, 511. We did this last time, but that's it, isn't it? If I knew the ending inventory, could I get to my cost of goods sold? Yeah. Do I know how many units I have in ending inventory? Do I know how many units I sold? Well, I know the units I sold. It was 12 and 19, wasn't it? So how many's that? Whoops, put it in the right place. Okay? So, if my sales are 31 and I had 51 available, how many must be left? 20, of course. This is too easy to believe. Okay? So, would that make sense over here? If you started with 16 and you bought 18, you bought 17, you sold 12, you sold 19, how many are left, guys? 20 units are my ending inventory. I do not know how much those cost. That's what I want to know. So no matter what inventory method I'm using, right, I want to know what cost of goods sold is, and I want to know what ending inventory is. Because cost of goods sold goes in the income statement, ending inventory goes in the balance sheet, and you want the right numbers in both places, right? So you get the right net income, show the right equity, show the right total assets. That's all we're doing. That's just inventory, okay? Inventory and cost of goods sold. But it's one of the hardest things to value in companies, by the way. Imagine for a manufacturing company, try and do it for Ford. You'll do this in accounting 102. You accumulate all their materials, the raw materials that go into the automobiles and trucks. You accumulate all the labor. You accumulate all the other factory costs, which are called factory overhead, and you figure out how much it costs you to produce each one of those vehicles. And it goes from raw materials inventory to work in process inventory to finished goods inventory. And then when you sell it, it leaves finished goods inventory and goes where? You sold it. The cost for producing it, for materials, labor, and all the other factory costs, overhead, are the total cost it costs to produce it. Where does it go? It comes out of inventory, credit finished goods inventory, and debit what? Cost of goods sold. Of course, we have to produce our own cost of goods sold. Imagine valuing that. How about valuing the ending work in process inventory? You've got a car that is only the frame sitting on the assembly line, right? It's just the frame on it. The year ends. How much is in there? No labor, I guess, or very little. Probably very little overhead, right? Other costs in the factory besides materials and labor. But some materials, right? And then on the other end, you have an automobile that you just haven't started the engine yet, but everything else is done, right? And it's midnight at the end of the year. That's still in work in process because they have to make sure it runs. Got the idea? But everything's done. Imagine how much more that costs than the one at the beginning of the assembly line. And then imagine all the other automobiles all the way along the assembly line at different stages of completion. Got the idea? It's a big deal coming up with this thing. And you know what? It really makes a difference because it's going to change your income, going to change your assets, right? Okay. So, all right. So what we got to do is value that 20. So we did perpetual FIFO. What were those numbers anyway? Not beginning inventory, ending inventory and cost of goods sold. All right, same as periodic. Okay, so what do we got? What was the ending inventory? 20 units that cost what? What was the value we put on it?
Cost of goods sold was $294 and the ending inventory for $217.
That's it. Okay? So we just copied the same answer. Thank you. All right, let's do perpetual. Life. Last in, first out. You want to keep track of every layer of inventory, right? You can have layers. We call them LIFO layers. What do we start with? Beginning inventory. By the way, the beginning inventory for each of these methods would not be the same, right? Because it'd be last time's ending inventory, and they'd be different with different methods. Just for this problem, they're making it simple, but happen to be the same. That makes sense? Yeah, they do whatever last time's ending inventory was. And it's different for each one of the methods, isn't it? Okay? So in real life, it'd be different. But it gets the point across, I think. How many do we have to start with? It's right there. 16 units at $9 is how much? 144, isn't it? Everybody with me? If I sell some right away, what did they cost me? $9. What if I bought some before I sell any? The new ones would be sold before the old ones, because this is what? LIFO. Got it? If it was FIFO, I'd sell all those old ones before I sold the new ones, right? Which is why you get the same value, perpetual and periodic. All right, so let's try it. The first thing that happens is a sale, not a purchase, right? Yeah, but if I do a purchase first, those would be the first ones you'd sell later, right? That makes sense? And I'm sure I'll do that on a quiz test or final. I'll probably have it both ways, right? Sale first or purchase first. All right, so fine. So I've got, what, sale one? How many units is it?
12 units.
Okay, which units? Which must they be? I've only got the beginning inventory. It's got to be some of those, doesn't it? We're selling off some of these. So 12 units at 9 is how much?
108.
108 bucks. Okay, tell me what the journal entry is there. That's part of it. This is LIFO inventory, right? What are you going to credit, of course? Inventory. What are you going to debit?
Cost of goods sold.
Cost of goods sold, absolutely. This is the cost of goods sold for that sale. Got it? And the sales price is what you recorded at sale, of course, which hopefully is a lot more than $9. You have to have a gross profit, and then, of course, you want net income, so you'd have to cover your operating expenses, right, guys? So let's hope they sold it for more than that. Okay? All right. So what do I have left? I have one layer of inventory, which is how many units? 4 units at what?
$9.
$9. How much is that?
36.
$36. Fantastic. Okay? Right? These guys are far more awake today, aren't they, than anything? Yeah, a little bit. He slept through both of them. You'll get more that way if you go to 2 of them, right? Sleep through both, hear it twice, somewhere in your subconscious, right? I think you should take, actually these are recorded. You could just play this while you sleep. You could listen to me. You ever tried that yet? You ever listen to one of these tapes that put you to sleep?
Not yet.
It wouldn't
But
be.
I'm gonna apply.
You haven't listened to one. Oh, she's never listened to one, so.
Oh, I have.
No, I'm kidding. But it hasn't put you to sleep yet. Anybody fallen asleep yet to the sound of my soothing voice? Yeah, that's curious. Yeah. I could sell these, sleep aids for babies. Okay, yeah. Some kid told me at the football game yesterday that I sounded like the mean guy, the bad guy, in the Legos movie. You guys seen the Legos movie? What's wrong with you people? Aren't you up on things? Yeah, no, I got to see the Legos movie now and see who the bad guy is. And I says, I'd rather be the bad guy than the good guy, wouldn't you? And he kind of looks at me, I don't know. Yeah, maybe he's really bad. Yeah, so anyway. So, what's the next thing that happens?
You have a purchase of 18 units at $10.
You got it. I told you guys we won, right? We won. Yeah. I'm so happy. So are the parents. What's wrong with parents? They care whether or not their little children win or lose a football game. Something wrong with that. I just wanted them not to get killed. That's all I want. Okay, anyway, so what does that give me? 2 layers of inventory, right? I now have 22 units. Did you guys agree with that? I could add them up if I want, which is what? 216? You guys agree with that? Yeah, 2 layers. And I keep track of those layers. This was a real pain when we didn't used to have computers. You have 100 layers, right, on an inventory item. And then you have 100,000 inventory items. LIFO was horrible to do perpetual, right? What about with computers? Do computers care how many units you have or care how many layers there are? Not the least. You just program it properly and it'll do it for you, right? So now you can use it easier, right? But you know what? If you were selling Rolls Royces, if you were selling diamonds, you think you might use LIFO? Perpetual? Then you use perpetual to begin with. Expensive inventories, would you use perpetual if it was expensive to use it? Yeah. I care about a $10,000 diamond different than I do a $100,000 diamond. How about you? Versus a $100 diamond. There's such a, anyway, $1,000 diamond. I bought my wife diamond earrings, and then, I don't know anything about jewelry. They're just rocks. Come on. Anyway, but expensive rocks. So she always wanted diamond earrings. So I went to buy. I got this gig where I got $3,000 she didn't know about. I never have any money she doesn't know about because all my checks are in direct deposit. That's the way it should be, right? Yeah, that's what I thought. Okay, anyway, so all my checks are on direct deposit. I don't have a checkbook or anything. I don't know how much is in the bank. I don't care. The cash machine, it works. Get $100 with my credit card in there. Give me 100. If there wasn't money in there, sometime I'd be pissed. But other than that, I'm fine. So anyway, so I never had my own money, so I had $3,000. So I went to this jeweler that she liked. I said, I'd like to buy my wife some diamond earrings. This was a few years ago. And he says, well, how much do you want to spend? I said, well, I got $3,000. I think I could get some nice earrings for $3,000. He started laughing. And he says, you want me to show you how small these earrings are going to be for $3,000? Shit, are you kidding me? What do people pay, for one you can see? And he says, you got to get up around 6 or 7. So you can see it. And the way I do that, well, no, it's going to be a single stone. He's going to do something with the setting to make it look like it was bigger than it really was. Yeah, so, okay, so I had to go get her to give me the money. But I still bought them for her, so that's good. So anyway, that's like our wedding ring. It was blessed by her uncle, who was a priest, who married a Catholic girl. Anyway, and even though I'm an agnostic. But that's okay because Catholic, never mind, we won't comment on that. Yeah. You guys are Catholic, some of you, so shouldn't be too mean. Now anyway, you guys drink at least, that's good. Otherwise I'd be out. So, but anyway, she had this ring blessed, and then she took the ring and put it in a box and got this new one with diamonds on it, after we had a little more money. And I'm kind of, you put in a box the ring that is blessed, and you want to wear that thing? How materialistic are you? Anyway, she still wanted the ring. So, okay, let's do this. So we've got, even though that's far more interesting probably, 4 units at $9 we've got 18 units at $10. Which are we going to sell first? Last in, first out. The 18, right? We're going to keep those 4 unless we deplete the LIFO layers. You read about depleting the LIFO layers, right? Okay, eliminating the layers. And you go back into that old stuff and it makes your cost of goods sold real low and your income high. Remember they talked about that? And you end up paying the taxes at that point, right? If you've adopted LIFO, but really for tax purposes. Okay, so anyway, what is sale 2?
Sold 18 units for $10.
Okay, there were 19 units total, was it?
Yes.
Okay, it's 19 units. So which 19, you want to do these 18 first? I agree with you. 18 units at $10, we already know that's $180 now. Okay, what else do we have?
Then one
We need
unit.
one more unit. It's one of these 4, isn't it? What'd that cost?
$9.
$9. I bet that's $9. Okay? So what do we have total for our sale? For the 19 units, cost what?
$189.
What's the journal entry, guys?
Debit cost of goods sold for $189 and inventory for $189.
Yes. Everybody got it? This is easy, isn't it? Now here's the thing. It looks easy. It's simple, right? There's nothing to it. You understand it. Practice a little. Because what's going to happen when you have a quiz sitting in front of you? You're going to switch them out for something. You know, you'll give me LIFO for FIFO, vice versa, right? It happens all the time, right? So practice a little bit. Get your thinking clear. And really, understand this stuff you guys don't memorize. This is way too much to memorize. And besides, it's a waste of time because it's so simple. You just understand it, right? I think everything's that way. Why memorize stuff you can understand? Okay, don't do that. If I was in a play, I'd have to memorize the words. Otherwise, heck with it. Right? Everything else, you just make it up as you go. All right. So what do we have left? One more purchase, right? What's purchase 2? How many units?
19.
It's right up here. No, purchase 2 is 17 units. We sold 19. Okay, 17 units, is that right, guys? Okay, at what price did we pay? $11. So, you know, that's the kind of nice thing about working that out to start with in those T accounts. Now you got it right in front of you. How much do those cost?
17 units at $11.
Yeah, it was 187, right? Everybody agree with that?
Yes.
I think so. Okay, so we had 180 purchase and we have 187 purchase now. So what do we have available right now to sell? What do we have?
At $27 from the 3 units left over.
We have this first layer here. We had 4 units. We had these 18. We sold all of them. We had these 4, but we kept 3 of those, didn't we? So I have 3 units at how much?
$9.
Yeah, so I got 2 layers, don't I? Getting the idea? So how many layers could you have? Unlimited, right? You keep adding them and not selling them, keep adding them and not selling them. You built the inventory and you bought them at different times. So you could have a bunch of layers. Okay, so I've got 27 plus 187 for my inventory, don't I? How many units do I have, by the way?
20.
3 plus 17. Is that number familiar to you guys? Yeah, it's my ending inventory. It's 20 units, of course, right? And what did they cost me in total? 27 plus 187 is how much?
214.
214. Okay? Now pretend these are millions of dollars, so they're not just $1 or $2 off, right? It'd make a difference, material. Got the idea? Okay? So it's 214. So what would you do with that 214? You could take the 214 and plug it in up here in the cost of goods sold schedule. What's 511 less 214?
297.
So cost of goods sold must be 297 and the inventory must be 214. Everybody agree with that? Well, what did you put into your journal entry? What's 108 plus 189? What is that?
297.
It's 297. It's a miracle. Of course, your cost of goods sold total is 297. Right? Same number, both places. We're good now. Got it? Yes, sir.
So, for periodic, if they're not always like keeping track, like perpetual, when like you say, all you see is like the 3 and 17, for example, they're different prices.
Now, that's for perpetual LIFO, right?
Yeah.
That's the only time you have it. If you were doing, you want to know if it's periodic LIFO?
Yeah, like if you have like inventory that's left over, but you're not constantly keeping track, like
Yeah, you wouldn't know when you bought them or when you sold them, right?
So
If I do it periodic. So in periodic, what would happen is I'd say, well, I have 20 left, right?
Mm-hmm.
And so for periodic LIFO, which ones do I sell? Last in, first out. So I would pretend like I sold these 17 even though I don't even have them yet. And I'd pretend like I sold almost all those 18. I sold 14 of the 18, right? Because I got 16 from the beginning inventory plus 4 from the first purchase, right? You don't know when you bought them or sold them, so you just assume that you kept the oldest ones under LIFO. So I'll give you a different answer.
What would stop the companies from price gouging on like certain units?
Oh, well, it's not really price gouging. Your sales price is going to be the same no matter what. It's not related to price gouging. You can't, obviously companies price gouge if they take advantage of weather or something or short supply, some abnormal short supply situation. They can overcharge their customers, we'd say, right? We consider that price gouging. That comes back to bite you later, right? If you're a hardware store and there's a heavy snow and you charge people $40 for a shovel that you ordinarily sell for $10, they're never coming back. I mean, you did yourself in, you made $30 extra bucks, but you're a crazy person, right? You should never do that. You never gouge somebody. And gasoline sales is like that a lot. There's a real shortage of supply for a few days, and they really try to gouge. Consumers tend to remember it, and we punish them for it. We should punish them all the time, right, for that kind of thing. Drive them out of business, knock it off, right? Stop that. But it doesn't really relate to the price you're selling it for. It's just the cost you're showing as cost of goods sold.
Okay.
Which is kind of silly that we have all these different methods of it. Because you're still selling it for whatever you sold it for, and you still bought them for whatever you bought them for. But different methods are going to give you a different estimate of ending inventory and cost of goods sold.
Right.
And all of these are allowed, right? That makes sense? So there's 5 different possible estimates you can have. I think the best estimate for what's really happening is probably FIFO perpetual, which is the same thing as FIFO periodic. Right? I think that's really the best estimate, probably. Okay? But the other ones are used, so you need to know what they are. And is there a tax benefit of using LIFO? Periodic or perpetual? Yes. Yeah. So, of course, we use it, right? Okay. Anyway, we'll talk about that a lot more in intermediate accounting when we get there, too. All right. So let's do, then, inventory that's perpetual. Last one, right? Perpetual inventory where we are doing a moving average. And this is a moving average because every time that you buy something, your average changes, right? So it's moving. How about that? Good name for it, huh? So what do we start with beginning inventory? Now this would be different in real life. Yeah, different with different methods because your ending are different. Next time's beginning. But how many units do we have in our little problem? 16 at $9. So we're keeping life simple. 16 units at $9 is how much? 144? You guys agree with that? Okay, then what happens? If there were a purchase first, you'd have a new average now, right? Because there's a sale, though, what am I going to have to sell them at? The current average, right? Current average is just $9. You've only got one anyway, right? Okay, so instead of keeping track of layers, we just keep track of the average. Before we had computers, this saved a lot of time to use this method. And it approximates LIFO and FIFO, kind of, okay? All right? So what do we do? Sale 1 is how many units?
12 units
It's
at
$12.
$9.
And they cost 9 because that is our average right now, okay? And that's 108, okay? What would the journal entry be? Debit what? Cost of goods sold. Okay, absolutely. Credit inventory. Now what do we have left? How many units are left? 4 units at $9 is 36, okay? Again, if I'd had a purchase first, that wouldn't be the same number, right? Because I would have sold them at average. Okay, so now watch what happens here. Here's purchase 1. How many units did we buy?
18 units at $10.
18 at 10. How much is that?
180.
180. Now we're going to do a new average. By the way, I could have more than one purchase in a row and more than one sale in a row, couldn't I? Who cares, right? Just the averages stay the same if you don't have a purchase, right? And if you do 2 purchases in a row, you got to calculate the average of all of them, right? The inventory you had plus the purchases. So how many units are there now?
22.
22 units. And what did they cost in total?
260.
216. 36 plus 180. Everybody staying in there? So you just divide the 22 into 216 and you get the average, huh? How much is that? $9.82. That's far better than the last class did. What they told me was $9.8. They didn't say dollars, they just said it was 9.8. Really? You guys go to a store and you ask them what the price is and they say 9.8, right? They don't say $9.80. Really? So don't do that, okay? Yeah, I'll give you the points, but it's kind of weird, right? Nobody does that, okay? We don't say $9.82, it's $9.82. Okay, anyway, it is $9.82 though. It's also, I guess, if it's a zero there, 980 would be $9.8 too. We just don't talk about it that way. All right, it's all money. Okay, good. So now what happens next?
I have a sale of 19 units.
Yeah. Guess what? This is easy, isn't it? What do they cost? $9.82. And of course, you can round these to even dollars for my purposes here, for our purposes here. In real life, the computer doesn't care. It keeps the decimal places, right? To infinity, really. Okay. 19 units times 982 is how much?
$186.58.
Okay, so we'll make it 187, let's say. Okay? Debit what?
Cost of goods sold.
Cost of goods sold. Credit what?
Inventory.
Inventory. Can you believe people in my classes actually miss that when they do the journal entry? How could you, right? After all these times of saying it, it's always debit cost of goods sold, credit inventory, isn't it? It's like on bad debts. When you do provision for bad debts, it's always debit, bad debt, expense, and credit allowance, right? It just always is. The number could be different. Same thing here, right? Okay? We're figuring the cost of goods sold. It's debit cost of goods sold, credit inventory. What do we have left? How many units?
3.
3 units. 22 less 19. What did they cost, of course? Seeing as we had them at 982 and the cost of goods sold we just did is 982, there's still what?
982.
982. That's what I think too. How much is that? 216 less 187. How much is it? 16 and 13, 29. Is that what that is, guys? So what is 3 times 982? Is it 29? I sure hope so. Okay, real close. Okay, sorry. Okay, good. Then what happens?
You bought 17 units at $11.
17 units at $11.
Yes.
Is how much?
187.
Okay. So how many units do I have now?
20.
It's a miracle, right? 17 plus 3 is 20. Of course it's 20, because that's our ending inventory. Just different inventory methods. And you could calculate what the average is here, couldn't you? What's 29 plus 187? How much do I have for total inventory? 216, is that what that is? $216 is my ending inventory for the 20 units. You guys agree with that? What's the average? 216 divided by 20. If you were going to do another sale, right?
$2.80.
1080. Is that what it is?
Yes.
Ta-da. We're brilliant people. It's a moving average. See it? Okay. All right, good. Let's make sure we're right. 216 is the ending inventory. What's my cost of goods sold in total? 108 plus 187 in it?
195.
195. Let's make sure this works. Okay? You don't have to do this, but just to demonstrate that it'll work every time. Okay? Oh, it's 295. What did I write down? 285. Oh, what? I don't know where I got that. Okay. Thank you. Somebody finally corrected me too. How courageous of you. You can laugh when you do it too. It'll be okay. She is kind, so that's good. Okay, so anyway, that's not 195. 295? What Pascals? You guys said the right number. I wrote it down. 295. 108 plus 187. Okay, good. So what do we got? 511. What did we say the inventory was?
20 units.
Did that cost what?
$2.80.
Which was 216? Okay, let's put the 216 in there. What's 216 away from 511?
295.
It's a miracle. Same number, right? Got it? Everybody see this? Is this easy? Yeah. This is an all or nothing, guys. It's going to be 6 points here, I don't know, 12 or 15 on a test, maybe 18. Probably 18 on a test. Again on the final. To do exactly the same thing. Can you raise your grade half a grade, knowing how to do this problem? Yeah. Wow. Allowance for alpha count. You know how to do that? Raise your grade by half a grade. No kidding. Really? One thing at a time. You just have to know there aren't that many problems, right? Not really. Okay. So 10 to 13 real problems, right, per exam. And then on the final, maybe 20, 25 of those. Sort of a random pick, right? I always pick the ones you got wrong. That's most people miss. I always put them on the final. All right, anyway. So let's do something else. We did number 2.
Number 3.
Number 3. Yeah, let's do number 3. This will make you pull your hair out. And we did 4 and 5 too, didn't we? And then we'll do the bank reconciliation in a little review session today. And you can find them out there online if you make the review session on Moodle. I posted the stuff the last 2 classes. I didn't do it till this morning. Sorry if you were looking for them. But I posted them out there. Have you guys all made a copy of this quiz now? How many worked it? Worked the quiz? Oh, good. Okay, that's wise. So all this is just kind of reviewing it. It's kind of nice, isn't it? And useful. Well, it kind of is, right? Oh, yeah. Another way of doing it, whatever. Okay. Or just reinforce it. Keep practicing. Okay, anyway, so there's lots of problems in the book. What's the deal here? They give you an understatement of inventory in 2012. You know, understatement of 1 year will cost what the next year? Seeing as a millisecond later, the next year starts. Understatement of inventory in the 1 year will give you what the next year?
3,000 less than.
The same understatement at the beginning of next year, right? Here's the deal, though. You subtract the ending inventory and you add the beginning inventory, so the air goes in the opposite direction. It's cost of goods sold, net income. And that's the hard thing to remember. So let's give these things a shot. Does that look like a balance sheet and income statement to you guys, or what? Assets equal liabilities plus equity. We've already done overstatement, understatement stuff, haven't we? This is just making it a little worse. You know what? We're going to do it for 2 years, though. So I've got 2012, and I have 2013. Is it always true that assets equal liabilities plus equity?
Yes.
Yes, of course. All your possessions, either you're still paying for them or you own them. Right? Okay. All right. So I got revenues less expenses for 2012. It's going to give me net income for 2013, and we have the same thing. Okay, but one of the major expenses is what? Usually, the biggest one for most companies is sell merchandise. It doesn't have to be the biggest. It depends on what your cost is of the product versus your operating cost. But for lots of companies, it's their biggest expense item. What's it called? The cost of the goods that you sold, right? Yeah. Okay. So cost of goods sold is one of the expense accounts, isn't it? And we compute that by doing beginning inventory plus purchases. Everybody agree with that? Gives me available. And then if I subtract the ending inventory, what do I have, everybody? Cost of goods sold. And we are going to do that for 2 years. So you don't have to write it out that way, but if you think about it this way, it'll really help. Right? You feel free to write it this way, I don't care. Okay? There's quite a few points on this, huh? 5 out of 25. This is hard, okay? First year's easy. Second year's hard. Okay, so getting half of them is pretty easy. All right, so here we go. Their ending inventory at 2012 is understated. I guess we could assume that the beginning inventory is fine. Make sense? So the beginning inventory is probably fine. It doesn't say, so it's okay. It doesn't say anything about purchases either. It just says the ending. So I guess purchases are okay. So I guess available is okay. And then what's wrong with ending inventory? It's understated, so it's too low by 3, right? Well, if it's too low by 3 over there, I guess it's too low by 3 over here, too. You guys agree with that one? Huh? On the balance sheet, it's too low by 3, and then calculating cost of goods sold is too low by 3. What's wrong with liabilities? Nothing. By the way, I could make purchases and liabilities wrong. All I'd have to do is say they failed to record a purchase on account. And it'd be debit purchases and credit accounts payable. I will not do that to you. When you get an intermediate, I won't. Okay, I'll give you all kinds of different mistakes. Thanks for that. Okay, so liabilities are okay. Well, guess what? If assets are understated by 3, what's wrong with equity? It's understated by 3. Please don't tell me that assets don't equal liabilities plus equity anymore, right? You know, make it the same on both sides of there, right? It's got to be, okay, in total. All right, so how did that happen?
An overstatement of expenses, not 3,000.
Oh, you have an overstatement of expenses, which causes an understatement of net income. It's got to be an understatement of net income by 3, because that's how we got our understatement of equity, right? Because we don't have any transaction here that's affecting equity directly, like contributed capital or a dividend or anything, and nothing like that's happening, is it, guys? Everybody got this? Okay, so yeah, net income's got to be understated. And is there anything wrong with revenues? No, it doesn't say anything about revenues. We're doing cost of goods sold. So if net income's too low, cost of goods sold must be what? Too high by 3. And how'd that happen? If you have the right available and you subtract too little ending inventory, what happens to your cost of goods sold? It's too high by the 3. Everybody agree? You with me? You know what? We have the answers for the first one. What's wrong with assets? Understated by 3 for 2012. Liabilities? No error. Equity? Must be understated by 3, huh? Revenues? No error. Expenses? Overstated by 3. What if I ask for net income? Understated by 3. What if I ask for cost of goods sold? Overstated by 3. Big deal. So that one's pretty easy, huh? Now here's the only thing that makes the second one hard. You have to remember that the ending inventory of one year is the beginning inventory of the next. For every single asset, liability, and equity, is the ending balance the same as the beginning balance of the next year? 1 millisecond later. Do your assets change, your liabilities change, your equities change? Now nothing changes. So it's got to be, if you're screwed up at the end of the year, it's got to be screwed up by exactly the same amount at the beginning of the next. Do you guys agree with that? We close the revenue expense accounts, but we don't really get rid of the revenues and expenses, do we? What do we do with the net income?
You add it into your equity.
You add it to your equity through retainer. So if it's a loss, you deduct it from your equity, subtract it from your equity through retainer and stuff. You don't get rid of them. You just start counting a new year. Let's hope all our sales and our costs don't go away as we start a new year. We don't want our net incomes to go away. Really, we earned them, right? But we put them into retainer as we start adding up the new year, right? Okay, anyway, so that is going to do what? So let's run through that one. That's going to make my beginning inventory 3 too high. Now that's going to have exactly the opposite effect of an error on the ending inventory, isn't it? I'm adding the beginning inventory and subtracting the ending, right? So it has an opposite effect. So the error is going to correct itself the next year. These are self-correcting errors. Now it doesn't mean you want the errors because you're screwing up how much income you reported in each year, right? But if there's no error in the next year, this will get fixed, right? Here's how it's going to go. Assume purchases is right, your beginning inventory is too high by 3. What will happen to available?
It's too high by 3.
Too high by 3. Assume your ending is okay. If your ending was fine, which is not this problem, but if it was fine, right? What would happen to cost of goods sold? It'd be too high. It'd be
Down by 3.
down by 3. Wait a minute. I did that. What did we do here? This was too low.
On the way
Too
down
high.
by 3.
Oh, I wrote it down. It's too low by 3. Sorry. It's too low. It's correcting the thing. Right? If it's too low by 3, this one goes up here. Too low by 3, right? Makes it too low by 3. Okay, so if beginning inventory is too low by 3, it makes available too low by 3. If you subtracted the right ending inventory, what would happen to cost of goods sold? It would be what? Too low by 3, and as you can see, these two errors offset each other, right? It would correct itself, okay? So then that cost of goods sold too low by 3, see it's correcting itself there, right? Would make net income what? Too high by 3, okay? Now remember, that's not going to make equity be off by 3. Now in the scenario I just gave you, the ending inventory would be fine. There'd be no error here, right? See, the ending inventory would be just fine, right? Liabilities would be just fine, so what must be the case with equity? It'd have to be just fine, right? No errors. So how would that happen? Well, in the first year, I had net income too low by 3. So I had net income too low by 3 would make my retained earnings too low by 3, right? Debit. What would happen in the second year?
Your retained earnings are now higher by 3. which
It makes it,
out.
yeah, the income's too high by 3, so it would zero it out, so I'd have no error there. Everybody see it?
But that's without the overstatement.
That's without the overstatement. So it corrects itself, right? Everything would be just fine. So if I give you a problem like that, all you have to do is tell me assets, liabilities, and equity are all fine. Revenues is fine. Expenses too low, net income too high. Looks funny, doesn't it? But that's what happened. So keep them straight. Okay, anyway, but there is 5, and it's 5 what?
Overstatement of
This
assets.
time it's too high by 5. So if it's too high by 5, what'll that do? Just add it to the 3. That's all you got to do, right? If I subtract too much, what happens to my cost of goods sold? It's ending inventory is too high. Oh, let's put it over here. Ending inventory is too high by 5. Liabilities are just fine. Well, it must be the case with equity, everybody. We already know the answer.
Too high by 5.
It's too high by 5. It's got to be the same number, but that seems really confusing, doesn't it? How'd they get 5? Well, the 3 corrected itself, right? But what's this 5 going to do? It's going to create a new error, which is going to be what? Overstating the inventory. That's where we got that. But what happens to cost of goods sold? You subtract too big a number by 5. What happens to cost of goods sold? It is too low by 5, right? Which is going to be a total of what?
Down by 8.
Too low by 8. So we've got to add that 5 in here, right? So how much am I too low in cost of goods sold? Revenues are fine. Too low by how much? 8, which is going to do what, of course, to net income? Make it too high by 8, isn't it? You guys see it? So let's see what happens here. I had a 3. Understatement of equity, didn't I? But what am I going to put in for this net income? That's this one, right? What's this one going to do for me?
It's going up by 8.
It's going the other way by 8. So you guys tell me, a debit of 3 netted with a credit of 8, what is it?
It's credit by 5.
Credit of 5. It's too high by 5, which is why equity is too high by 5. And now you're thoroughly confused, right? If not, great. If so, work on it, work on it, work on it, work on it. You can make up examples and work them. Have a friend of yours do the same example, right? Maybe several friends, so somebody gets it right. Okay. So make sure your thinking is clear, get it straight. Okay. We good? This is easy, wasn't it? I must not have done something with you guys. We have 2 minutes left. Short change here. Actually, somebody asked a question about number 5. There was a problem in the book where they had a discount, but it was very similar to number 5. We hashed that a little bit. What do you do? I'll do it. It was a $9,000 deal. It was 3% 10 net 30. I have never seen 3% 10 days net 30. I have never seen that high a discount, but they probably exist. Or used to or something. Right? That's a massive discount, isn't it? What interest rate would that be? 20 days, 3%? 18 and a quarter times 3%? That's a real high interest rate. Not 56%, is that what that is? Something like that? Interest, we always take that discount. Wouldn't you think? Yeah, wow. Always take discounts in. Okay, anyway, but it was a 9,000 sales, so you debit accounts receivable for 9,000. And credit sales for 9,000. So yeah, we do the same thing. Why? They paid within the 10 days. What would they do if they paid within the 10 days? Say that was January 1st. They paid January 10th, within 10 days. Give me the journal. What do they give you?
They pay cash.
Debit cash. But what do you get rid of?
Accounts receivable.
Yeah, and if they're paying off the whole thing, what would you want to get rid of? All of it?
Isn't there interest in that?
Well, it's not interest. It's a discount. They took a discount, 3% of the 9,000, didn't they?
So
Sure
you
they
pay
would.
cash of 8,700.
So what is 3% of 9,000? 270. So the difference between 270 and 9,000, right? So how much is that? 8,730.
Yes.
So what do you call that? 270?
Count.
Yeah, sales discount. That's it. We got a sales discount. Let's expand it a little bit. How about if they go to the 11th and want to pay? Just don't pay them. It's too late, right? What do? Wait until 30 days, right? So on February 10th, approximately, right? They'd pay February 19th. They'd pay with, hey, this is going to be a leap year this year. You guys know that? Found that out. My wife and I were spring breaker going out to the West Coast to visit my youngest granddaughter again, and my dad. So, notice I don't care about my kids. They're there too. Yeah, my son, his wife. Who wants to see my grandson? Anyway. So, he's a good guy. She's a nice woman. Very nice. Good girl. So anyway, what are we going to do? If they don't do that, we'll wait until January 31st, probably. That's 30 days, isn't it? And what would we do? They'd pay us cash how much? The whole 9. And credit.
Accounts receivable.
Go away. And study hard. But